Hello, Nari McDiarmid for miningnews.net, and I'd like to welcome Iain Macpherson, Managing Director and Chief Executive of Tolu Minerals. And Iain, Tolu debuted on the ASX just 6 months ago, looking to restart the Tolukuma mine in Papua New Guinea. Now, obviously, gold and silver prices are pretty attractive at the moment, but what is the appeal of Tolukuma?
Good afternoon, Nari. Thanks for the time. Tolukuma is a historically operated, very high-grade gold-silver producer in the center of a large, fairly well-known epithermal belt, the Tolukuma Belt. We've picked up the mine and a large footprint of exploration ground surrounding the mine on the broader epithermal structure. And the opportunity for us is to leverage the restart of the mine to explore and define a much larger resource base, and ultimately to explore the region and define a very, very large gold-silver resource.
Well, Ian, you've got cash in hand. You successfully raised about 8.8 million in April. So what's the company hoping to achieve by the end of this year?
As you mentioned, we IPO'd on the ASX in November last year. And the planning from the IPO was to get the exploration going, get the mine refurbished and start small-scale bulk sampling to start getting back into the old operations and start scaling up the resource and ultimately the reserve with a view to getting the mine ultimately back into production. What we've realized in the last 12 to 18 months is that the opportunity exists to really accelerate the exploration planning. And that's the principal reason for this accelerator round, as we call it, raising, as you say, 8.8 million Australian. And it's allowing us to specifically to engage an airborne magnetotelluric survey, which will help define the regional exploration in our very large footprint and enhance the exploration strategy and planning going forward. And that's the specific purpose. But in parallel with that, we're refurbishing the operation, getting to work on the on-mine and near-mine resource. We've got a drilling program underway at the moment. We're refurbishing the infrastructure up there on the mountain, the mine site. The mine is the sum cost or the replacement cost of that operation in total, we estimate, is around about $500 million Australian dollars. So our strategy is to leverage that very good infrastructure, upgrade it, refurbish it where necessary, and leverage that to grow a larger resource and ultimately a much larger production.
Ian, what do you believe should give investors confidence in the company and its plans?
Papua New Guinea is undoubtedly one of the great gold provinces in the world. There have been some very substantial gold mines, copper mines over the years, some big production, but it's underexplored and underdeveloped. And Tolukuma sits in the middle of a very large epithermal structure. It's relatively well known, with potential for a multi-million ounce discovery or resource. And that's really what we're targeting. And of course, as you mentioned in the introduction, the gold and silver markets are working in our favor at the moment for once, which is very pleasing.
So finally, Ian, how would you like to sum up to a potential investor listening?
Potential here is to participate in a very exciting, relatively low risk, although I've got to be careful saying things like that, I guess, but relatively low risk project, which has the potential to deliver, first of all, a very large, very significant gold silver resource on the back of historical proven operations. So it's not as if this is an early stage greenfields exploration. The mining lease itself was stopped ahead of its time, not because it ran out of resource, but because it was poorly operated, essentially because it was helicopter serviced. So our challenge is to get around those historical sort of cost drivers, specifically to build a road, which is about halfway in now, and to re-equip the operation and leverage the infrastructure that is there by doing a bit of refurbishment, and we're well underway with that. Leverage that to grow the exploration portfolio, grow the resource, and ultimately we're looking for a much larger operation, several hundred million ounces a year, several 100,000 ounces a year production potentially.
Ian, I can see it will obviously be far easier to service an operation by road rather than helicopter there.
Yes, indeed, Narayan. And our first key project is to get the road through, as you note. But it's not just the road that was the serious cost driver historically. Mine was built with essentially a 3 megawatt hydropower station, so free power. That was allowed to run into disrepair in the latter years of operation. So hydropower was replaced by diesel power. Of course, diesel was flown in under a helicopter, so you can imagine the cost of that. And also the mine has never benefited from a bottom entrance. It's sunk from the top of a mountain into the mountain. And that means that there's been a very heavy pumping load, which was fine in the early years when power was free, essentially. But by the mid to late 2000s, power was being made by diesel. And you can just imagine power costs amounted to, or rather diesel costs, amounted to about 60% of the operating costs of the operation. And that should be in the order of 15%, let's say. And that was the real, and that's effectively a fixed cost. So that was really what destroyed the operation and caused it to go into care and maintenance way ahead of its time. And it went into care and maintenance with only about a third of the mining lease developed, never mind the broader exploration footprint. So our strategy is to fix those three primary cost drivers, which are all about fuel, essentially. Get the road in, stop helicoptering, refurbish the power station, put a bottom entrance in, get back to a sort of a more normal cost base, and then on the back of that, develop a very high-grade production. Historically, when the mine was run well, the recovered gold grade was 23 grams a ton. There are very few mines around the world that can boast that sort of grade. And that's really what attracted us to it. It's the potential to leverage that sort of opportunity, the infrastructure that's there, and then the very large exploration footprint that we've put together. We now have around about 1,800 square kilometers of ground across the broader Tolukuma structure, as well as some other ground feeding into the pipeline. So a very exciting opportunity, and one that really lends itself to a rapid growth rate.
Oh, it's a busy agenda. All the best with the months ahead, Ian.
Nari, thank you very much.